All right, welcome everyone to the midweek market update. The crux of the whole situation. Every trading week, Mondays is a reconnection to the market from the breakdown over the weekend. So it takes a good 24 hours for the market to sort of re-stabilise and the currencies to find their sort of common ground again. Then the week, it doesn't matter what happened last week. It's all old news. It comes back into the sort of fresh news that's in front of us. By Tuesday, they're settling down. They're starting to get a bit of a rhythm. By Wednesday, in Asia, the currencies have already sort of got their rhythm. You can feel the beat of the US dollar, or the Aussie Kiwi, CAD, sterling, and there'll be a specific focus, and it should be shining out by now. Now this week itself, just first and foremost, I'll come back into the actual economic data, and just to make it sort of simpler, going through say something like the Forex Factory is easy to sort of gauge. This is, and then the major sort of data that comes out is usually, besides the RBA stuff on Tuesdays, Wednesday, Thursday, Friday are the sort of key days, in particular Wednesday, Thursday. All right, so today, for instance, we've got the Australian GDP numbers. It's a quarterly release. It's the overall health check of the economy. This is one number that, in the old, well, not even the old days, it's the number one sort of key data to give you a snapshot of how the economy is going. If they're obviously, if we're in a recession, you get a couple of numbers here negative in a row, then that's officially sort of recession. So the GDP number is a sort of key indication of overall economic growth and health and all those sorts of things. So as it is, it's been pretty steady here, 0.6%. If I just come back to the major Reuters sort of data here, I always sort of trust this a little bit more than the retail sort of sites you can get to. So 0.6%, that's our major focus today. The best thing about this data, besides being quarterly, so it actually has increased weighting as far as traders are concerned, it's just one number, and traders cannot get confused with this. With the central bank statements, you'll understand and notice when you're actually trading those events, you're looking at the rate decision itself, and you're trying to flick through the statement, trying to work out if there's a bias of further rate cuts coming or no cuts, and it can be quite ambiguous and hard to determine what's going on. And then you've got to factor in the market sentiment, how the position the market is set, all those various bits and pieces. Makes it a very hard trading opportunity. But these numbers are sort of much better because it's either stronger, weaker, or as expected, and that'll give us an easy trading opportunity. What we have to do is put that data into the actual technical backdrop, and that's where we'll get the trading opportunity from that. So that'll be obviously later today in a couple of hours. And this is where you, coming back to the economic data, you don't want to be getting frustrated at this point in the week and thinking, well, I haven't locked in some cash yet. Generally what you should be thinking of, if you're risking, say, 1%, you're looking to make 3% per trade. If you get one good trade a week, that's 150% a year, okay? So it's not so bad. Generally, as you trade and we get more focused and the market stabilise, you're trading probably a little bit bigger, 2 to 2.5%. You're picking up 7.5% a trade. You only need 1 or 2 trades a week to really sort of experience some aggressive capital growth. So we've got the GDP numbers here in Australia. That's the sort of major focus here. All this European news, Spanish, Italian, French, forget about it. It's a bit of a waste of time. The trade balance numbers down here this evening for Canada and the US, the trade balance numbers are nothing. They don't mean anything. Okay, there's no economic consequence. It just tells you what the balance of trade is, and that's no point to us at all. It's ridiculous. The major sort of key event. This is the start of the central bank melee. We've got the Bank of Canada tonight. Once again, there's no change in interest rates expected. But it's going to come down to the statement again, okay? That's the sort of, looking at what are they thinking. There's been a whole range of weak Canadian data. I wouldn't be surprised. Well, they're not probably going to cut rates at this point, but they definitely should take off the table any chance of raising interest rates. So that'll be once again a bit of an ambiguous trading opportunity. We've got some good technical levels in the CAD, so that's probably something to be really focusing on. Then Thursday, Aussie trade balance figures. Once again, it's a nothing number. I don't understand why some of these sites have this stuff up as red. It's probably white or yellow at best. Now, for Japs, This is where the central banks kick in. Monetary policy statement and the press conference. They love to keep the market guessing. There's no set time frame for this. We're going to be holding a webinar around 1 o'clock to sort of assess the situation. It could be any time between 1 and 3 p.m. when they generally come out. Depends how much sake the boys like to sort of get into. Then, now coming down here at the moment, going back a year or so ago, these bond auctions in Europe would have been of significant importance. The pressure and the fear's gone out of the bond market at the moment, so those bond auctions aren't as focused, a major focus. What we do get into, once we get into early Europe, they will be sitting tight. We've got a whole swag of central bank stuff here, the Bank of England and the ECB coming out with their rate decisions. Now, we know that there's not going to be any change in interest rates from either of them. So what we do is you're really sort of focusing on the statement, looking for any sort of change in their previous statement, as it is for people new to the sort of trading game. These can be quite difficult to interpret. What you really need around these events is some good technical framework to really, pinpoint your trading opportunities. So what we've got with those things, though, the key thing to the statement is it really sets up the next month of trading, the next month of data, because what they'll do is we're looking for specific information into what they're looking at. Now, the Bank of England have already sort of suggested they're looking at unemployment figures as being the sort of catalyst for them changing policy at 7%. So that's a key thing. We want to make sure that's still in the statement. And if there's any change to their asset purchase facility, I can't see any changes there at the moment. What we will get next week is the breakdown of the vote, and that's probably a more important sort of event. Then the one smarter organisation out of all the central banks, I say that quite loosely, is the ECB. They actually have their press conference 45 minutes after the actual, they announced their interest rate, then 45 minutes later they have the press conference. Now, why is this better? It takes out the ambiguity of the actual event. So the rate decision itself is not an event, but the press conference is. Generally, when you go back and the rate decisions are 50-50, this is where you have two really good trading opportunities. And because they're broken apart, you trade the first event and you come back and have a second crack at the second one, the press conference itself. So that's what we're sort of looking at. What we're looking for is any mention in the conference, which is the statement, with regards to any ongoing issues. Is there any problems escalating? The central banks rarely focus on the negatives. They usually pinpoint a few of the positives and run with those. They don't want to sort of create volatility in the market themselves. They're there to more stabilise things. That's why some of these, getting the experience of understanding the statement release and how they release things and how they say things, is the key to sort of really getting an understanding of what direction the currencies are going in. All right, so then following that, we've just got the weekly unemployment claims out of the US. Now, this is not a big number, okay? People think it's the big precursor to the non-farms. It's actually not. It's just a weekly number. Going back a couple of years, this was so far off the radar, it wasn't funny. And it's because it's weekly, it's usually pretty close to the mark, okay? If there is significant variance, well then, and if the market's looking for an excuse to sort of move the dollar around, well, they can sort of jump on it. I don't see it as a major event itself. Once we get past this, you get the ISM non-manufacturing data as well. That's the other sort of second component of the manufacturing sort of side of things. It's a good historical number. As you can see from last night's number, we saw a quick move. There's some things overshadowing all this, which I'll come to in a minute. But the major part of that is an overshadowing event is the G20, upcoming G20 meeting in St. Petersburg. That will pretty much put a lot of currencies to bed for the week as it goes. So, but that's going to be more announcements will come out over the weekend. Then Friday, well, you get Swiss CPI data, and that's not going to sort of create too much storm. That should be like a yellow or orange number. As I said, the Swiss economy is very small. Anything that comes out there rarely has an impact. UK manufacturing production on Friday could be a very short-term event. Why am I talking short-term Friday? Because primarily we've got a defined period before the market shuts. Also, we've got this G20 meeting coming up. Now, CAD and the US non-farm payroll data, two good releases. Okay, it's such a shame that they're both released at the same time, and the poor old CAD, it's dollar against the CAD. So when this data comes out, the CAD is usually sort of left there flapping about. What we generally need is a strong US dollar and a weak CAD number, and then you get the serious moves. Generally, what happens is that they're very similar economies and very similar numbers. They sort of nullify each other, so there's not much movement in the CAD on this. Occasionally, the data is released on different days, and then you've got a good trading opportunity on the CAD, and then a good trading opportunity on the US dollar as well. Now, the non-farms itself will be the key event. We've watched the last probably 8 months of them. They are quite wild, but what we're looking for is they have, made a lot of reference, or Bernanke's made a lot of reference to 6.5% as being the sort of key flip over level for unemployment, for quantitative easing to be tapered. So any movements from that 7.4%, will be a trading opportunity, either up or down, and that's what we're sort of looking for. The market will be very closely just looking at the rate and then trading off the back of that. Okay, so that's sort of where we're gearing up. This is like the start of the week, pretty much. We've had a bit of a crack yesterday with the Aussie retail sales and cash rate. Having those on the same day is a real shame, because they're sort of two good trading events. The retail sales numbers were sort of even overshadowed by the rate statement, there was nothing in it, which was very similar to last month. If anything, and I think one of the guys was mentioning, Terry McCrann's come out and already saying they've got to cut rates next month. I'm sort of in his boat. The economic data is continuing to be worse than expected. Retail sales, unemployment figures next week will be key to that. But if we get some weak numbers, then you can be pretty much sure there's an interest rate cut coming. And they've already said in their statement that they will be, if demand drops off, they will be, cutting rates. So the focus from here, Aussie GDP, then the central banks, Bank of Canada, followed by the Bank of Japan, Bank of England, ECB, and then we're going to cruise into the non-farm payrolls on Friday. So it gets busy. What you really want to be doing is focusing on your get your major currency pairs up. Make sure your trend lines are all, daily, hourly trend lines are all in sync. You've got all the key levels here. Once you've done that, there's not much else to do. You can sort of prepare the days and say, okay, look, today is the Aussie dollar. You should have your Aussie dollar chart up, have your levels there right in front of you, so you know where the critical levels are. Means the data itself can be a good sort of starting point to trade, and then obviously the technical levels afterwards. Dollar yen has broken higher. That's going to be a positive thing if dollar yen's going up. Generally, all the yen crosses are going up as well. Obviously, in this point in time, euro is broken down. Euro is the only one that's broken down here, which is a sort of telling sign that something's amiss. There's been no real bad news out of Europe. I mean, there has been a lot of US dollar strength coming from Syria, the Syrian crisis, but everything else is sort of trading a bit of sideways. Aussie and Kiwi are sort of rallying. Sterling sideways and euro down. The currencies are out of whack, okay? So what you do is, when they are out of whack, focus on the individual currencies, micro trade them, okay? So Aussie GDP numbers today, it's an Aussie trade. When we probably go into Europe, we'll probably be looking to square up, because there's a lot of uncertainty around the Syrian crisis and also what's going on in euro and sterling. Now, this brings us back to the main part of the sort of the midweek update. Now, if you've got any news services up, there's a whole bunch of stuff coming out here. White House official says Obama had a whole bilateral meeting with China and France at the G20. I'm sure Vladimir is going to be putting his two bobs worth in. He wants a bit of global credibility. Then you've got the reports about Assad and Israel being involved in the Syrian sort of troubles over there with the chemical weapons and all those sorts of things. There's fingers being pointed left, right, and centre. There's the Israeli sort of missile testing. This is overshadowing everything that comes out. These sorts of crises will dominate the economic fundamentals. So if you are trading say for instance, we'll be trading the Aussie GDP data today, you've got to keep in the back of your mind, if anything comes out, it will upset the normal flow of the currencies. Okay, so it's a very unfortunate thing, and this is where you'll get really annoyed when events like this happen. You read the newspapers generally and you think, oh, well, there's a crisis on over there, no big deal. Well, I can tell you, as a FX trader, it is a big deal because it actually upsets the flow of your trading and the flow of the currency. So that's something to keep an eye on. It's not something you sit in front of the computer and monitor. What we'll be doing is, looking at the Aussie dollar here, looking for some key strength or weakness in the data. If it goes through the technical levels as well, then there's an extra trading opportunity. But then once we've got the positions on, we'll be managing the positions a little bit closer. If we're 30 points in the cash, raising the order to the stop loss to break even, give it a chance to go. But as it gets to Europe, I'll probably be squaring that up as the whole news beast kicks in Europe. They love it's all propaganda. Europe and North America being the biggest, where most people are, they just kick in and start producing rubbish, and it upsets the flow of the currency. So bear that in mind. We have got a lot of key data coming out. Each of these events, as I said, probably Thursday. Don't expect too much Thursday as the Wednesday, Thursday as the central banks roll out their bits and pieces. I can't see them saying too much ahead of the G20 as well. They're probably happy with the way Euro's going at the moment. It's only dribbling off. Fears taken out of the market. The UK are pretty happy with where sterling is. The Bank of Canada, they've got their own sort of concerns, and things are going pretty steady with the Canada. They'll be pretty happy with the way the CAD has actually sort of dropped off just of late. But you can actually see here on the charts, the correlation here with oil and Canada has sort of gone by the wayside somewhat, and it's been overshadowed by this Syrian crisis. What we do have is we had a little dip through that level last night, just by about 10 points. But once we get through 105, the figure here, we're starting to look for a good move on the downside, and that's probably something I'll be watching very closely. The statement tonight may give us a trade here, but you can see it's actually been trading sideways somewhat, and the tension is building. If you're looking for terms like a pennant sort of situation, there's the odd little spike higher here, but not enough to send it through, and obviously down here last night, a little poke down. I'm thinking that on the downside, there's a great chance for a move down once it gets down through that 105, the figure level. That'll probably come from, the direction will probably come from the central bank itself, Bank of Canada, and that's later tonight. All right, so that's pretty much it. That's the sort of midweek market update. The currencies are starting to get into some routine. The US dollar is giving back some grounds. The currencies are looking strong, but they're being overshadowed by the Syrian crisis. Okay, so that's something to put into your into your trade plan as such, and think, well, it's not a week to sort of go mad with your risk, put it that way. Okay, any questions on that? No? Okay, well, thanks for clicking in. We'll be back at 11:15 today with the Aussie GDP data. Okay, thanks very much.